Hello and welcome to this new episode of the FinTech Scotland podcast. Today we're going to ask ourselves if we are ready to be in a cashless society to operate in a digital-only payment world. As you know, the global shift towards digital payment is accelerating, with cash usage declining year after year. Digital payment solutions like contactless transaction, mobile wallets, cryptocurrencies, and so on and so forth are reshaping the financial landscape. And it's a global movement, right? So in the UK, cash now accounts for just 14% of all payment, which is down from 55% just a decade ago. So it's moving quite fast. And in Sweden, they've said that they would become one of the first cashless society by 2026. That's just next year. Obviously, we've also seen in China with the digital yuan reshaping financial transaction at a national scale as well. So lots of great things happening all around the world. And we need to ask ourselves a few questions. Are businesses and consumers fully prepared for a digital-only economy? What are the risks of excluding those who rely on cash? What are the implications around cybersecurity and digital resilience? So lots of great questions. And in this episode, we'll examine these implications really about a cashless future, if there will be one, in fact. And we'll hear from our experts today on the call. Grateful to be joined today by three fantastic guests, starting with Craig Forsythe, CEO and founder at Scottish fintech Giftround. How are you, Craig?
Yep, very well. Thank you, Mikhail. Yep, I'm just down in London this week. I actually go to the Gift Card and Voucher Association conference this week, so quite interesting. Maybe I'll have more to say after the conference than we'll have.
Absolutely. Well, we should catch up afterwards and do episode 2 on the topic.
Yeah, sure.
For those who don't know Giftround, do you want to give a quick introduction about that?
Sure, yeah. Sorry. So Giftround's an online solution for the group collection of money for the purchase of gifts. So we essentially 7 years since our first collection, but the idea to replace the office whip brand for leaving gifts or people going on maternity leave or significant birthdays. And now that's broadened out really we have lots of people using Giftround for different occasions, from teacher collection gifts to kids' parties to just a whole range of group collections for gifts. Yeah, that sounds
fabulous. We're also joined by Chris Elsden, Chancellor's Fellow in Service Design at the Institute of Design, Informatics and Edinburgh's Futures Institute. Chris, how are you?
I'm very well, thanks. Yeah, thanks for having me. Really excited to talk about it.
Well, thank you. Do you want to talk a bit about what you're involved with at the university?
Yeah, so I'm an academic in the Institute of Design Informatics and Edinburgh Futures Institute, and we do lots of research about design and emerging technology and really think about the implications on a sort of social side for individuals. So I've been doing work in 5 to 10 years about lots of different kinds of payments, fair bit in the blockchain space, and really concerned with the subtle meanings and nuances that money has on a social level, that when you try to design things like Giftround actually turn out to be much more complicated than it might seem when you work it out as a kind of digital transaction. So yeah, I could talk all day about this kind of stuff.
Fabulous. Well, great to have you with us. And we're also joined by Neil Coleman, a design director at Nile. How are you, Neil?
I'm really well, thanks. Thanks for having me on. Excited to talk about this.
Fabulous. Could you introduce Nile maybe to those who are not familiar with the company?
Sure. So Nile, we're a strategic and design consultancy based out of Edinburgh in the UK. I would say that we're, it's business transformation really, but we do a huge amount of our work on the human side of that story. So I wear a couple of hats for this topic. One of them is, I suppose, inspired by our direct interaction with customers of financial services that we, in the research that we do for our clients every day. And then the other hat I wear is really that future gazing lens. So I'm going to lead the foresight practice here. So we're continually scanning the horizon, thinking about possibilities. Where could this go in the long term? So yeah, excited to talk about that.
Right. Well, let's start with the horizon then. If we look ahead, because I guess the topic is around cashless society. We're not there yet, but will we ever be in a cashless society, or will cash always have a role to play? What are your thoughts, guys?
Yeah, I can go first on that one. I think my general principle when thinking longer term is it's dangerous to any kind of dogma or kind of fixed views are dangerous. So I kind of try and be flexible in my thinking. There are a couple of ideas that I have in my head at the minute that we're going through. We're at the moment, we're rewiring trust across many, many levels in society and in, financial services and the way people interact with them. And so one aspect of that is privacy data and all that kind of thing. So I can definitely imagine one possibility where, in order to kind of protect privacy and maintain control, people would maybe lean a bit more into cash, actually, through the fear of either, being overly tracked, or perhaps bad actors in the economy steal your information or harm you in some other way. So I can definitely see that as a possibility. Equally, though, as a parent to a young teenager, the amount of time they spend in digital and how they think about the world is just completely different to the way I would think about it. And so I'm holding these two ideas in my head at the same time. So in short, I think it's dangerous to have a fixed view about where cash goes. I have a gut feel that it's not going to go away in the long term, but what it means, anyone's guess, really.
Maybe to add to that, I think for me, whatever happens, we're going to need sort of plurality, so different forms of money. And we might want to think about some of the things that cash does do well, whether that's about, as you're suggesting, that it's harder to track, or you can have cash outside of an account. It doesn't necessarily have to sit in one person's account or another, or even like some of the kind of basic social things that you can do very quickly with cash, like make a kitty or have a whip round that then loses some of its convenience in the most of the digital economy. So I think we want to think about maintaining that plurality, and also think, how can we, in some ways I often think within what's the context of payments, we're quite unimaginative, and actually realizing we can really design money, especially with things like open banking, to do quite interesting things. And people used to do that all the time with cash in a very physical sense, by getting a jar and putting it in the middle of a table. So how can we kind of ensure people still have that flexibility, not just to use one payment method, because in truth, it's always very situated. And I think the more we give people options that will be feasible and convenient and interact properly will be really important, even if that's not in the form of cash exactly as we know it today.
Yeah, it's interesting. Yeah, well, certainly from our perspective at Giftround, we've sort of seen in the early days when we had a lot of feedback from our customers saying that people gave more when they contributed via online payment. And I guess that's just because they gave what they had in their pocket, potentially, maybe saved a bit for lunch in the traditional office sort of card and envelope. I think it's all about convenience at the moment from our perspective. And we were trying to make it as easy as possible for people to make those payments. And then I just think that the tangibility of having cash is that we're losing that really quickly, I think, with our younger generation. My daughter found a 5p coin on the floor in the car park at the weekend, and she was totally amazed. I don't think she's ever seen one before, but she's 4, and so that sort of is slightly worrying, I think, a little bit, but because I think we are potentially losing what money is. I mean, she knows that daddy goes to work and mommy goes to work, but like, what does that mean? And they don't see anything at all anymore.
Can I just pick up on that? Because we've just been doing some research that's not published yet about kids and money, and looking at kids that are slightly older, so sort of 7 to 12. And what we've found, which in some ways isn't surprising, but was notable to us, was that all of the parents we spoke to were still using cash to start teaching their kids about money. And then kids are on this journey where they are introduced into a digital economy. They might start using the apps. Being something you can do when you're 13 is becoming a milestone for kids. But it was striking that they all still started with cash, and that was still the entry point. And so actually it occurred to us that when we think about cashlessness, we often think about maybe the older generation. But I think if you got rid of cash tomorrow, it would be lots of 7 and 8-year-olds who would suddenly be very excluded from this digital economy. And we don't really, even if they're going to go on and use money in very different ways, as Neil suggests, actually there is this period of their life when at the moment cash, and because of its tangible properties, easier to learn and see, and those kinds of things. So I'd be very interested to know how your daughter progresses, and when we start to try and give her pocket money and things like that.
Yeah, that's true. Yeah. I haven't thought about pocket. Well, they don't get pocket money, but at the moment, obviously, but yeah, that's true. Yeah, they just don't see it. We don't have cash around the house apart from to pay the window cleaner and the fish van, man. We don't have any cash, so it's just in a wee drawer. All our payments.
One of the great stories we heard from a parent was actually them borrowing cash off their kids to pay the window cleaner. You know what? Actually, the kids have got more cash than they do.
It's funny.
There's something about the meaning that cash has that can make little moments really delightful for kids as well. I'm just thinking of just a personal story where, the grandmother wanted to give some cash towards a gift for the grandson, and she said to me, should it be, should I do it in the bank account transfer, or, should it be cash? I just said, I think actually cash would be better. And what she did was She put the £10 note around a chocolate bar, and each one was wrapped differently. And the whole theatre of like this gift giving was completely, transformed by the physical aspect of cash. And I think you probably could find a way to do that digitally, but you'd have to think quite hard about it. So there's something about that immediacy and also those little moments for a kid anyway that are quite nice. Just while we're on the topic of children and money and things, the other thought I had was, where kids are learning behaviors around money outside of the traditional areas. Chris, I don't know if you've come across this at all, but certainly gaming like Roblox and all these other things. So, and some of these games have some quite sort of, I don't want to use the word dangerous, but as a parent, like quite concerning kind of dynamics in them, like, loot boxes, let's say, and all these other kind of factors. And I'm thinking, what are kids taking away from those experiences? And do we need to be a bit more, intentful in the way we put them in front of them?
Yeah, I would say certainly kids came alive when they talked to us about gaming, so they could actually talk in sort of economic terms very clearly about what's happening. One of the questions we had was like, do kids know what real money is? They were very articulate to be able to sort of explain how they could get value out of something they were doing in Roblox. And one kid in particular was able to talk about the whole kind of economy that you had going. So on the one hand, you think, well, actually, they're getting to do a bunch of things here that actually maybe they wouldn't be able to do in their day-to-day lives, and that could be quite valuable. Equally, we can see that we didn't come across any specific examples in our study, but parents were aware of these things and concerned about the kind of potential to encourage them to gamble. Actually, I would say the kids were fairly robust in understanding the difference between what they were doing in Roblox, say, and the difference between, they were more confused about inflating mortgages, these kind of stuff.
Yeah, and I guess maybe some of the games are teaching them that, because if you look at some of the coins that you can buy in those games, I mean, my kids used to play Fortnite and others. It's almost like tokenization. It's a bit like a cryptocurrency. And actually, inflation exists in this world because with £10, from time to time, you can buy more or less of a given currency on the game. And we're speaking very closely to the gaming sector here in Scotland, which is quite strong, but also in other jurisdictions. And it's interesting, the link between gaming and finance more and more, actually. And in terms of, I think one of you mentioned convenience when it comes to digital payments. Is convenience the only driver behind the slowdown of cash payments and the increase in digital payments? So are there other factors like security, like business efficiencies that we can highlight?
I mean, some of it is kind of, I suppose, simple economics in the fact that supporting a digital infrastructure and a convenient way to transfer money around is going to cost organizations less to deliver overall than it would do the old way. So I think there's that. That is a key driver, of course, certainly in the environment that we're in at the moment. Are there other factors? I think you've got to think about the ecosystem of individuals and businesses and things people interact with day to day, because if they can't participate in certain aspects of the economy or in their life without being digital or using digital payments, then there's an exclusion factor to consider. And so that's being able to participate in society, is obviously a key driver, but that can be a problem. We've definitely seen that in the research that we run here around, people in vulnerable situations that perhaps struggle to get to access services in the way that we would anticipate. So, I think those are the things that spring to mind for me, at least.
I think I'd add something we're really interested in as we move to more digital and electronic means of payment, that, the banking system is designed very much around this idea of an individual has an account and all the security and privacy and things is based on that very individualized view of money. But actually, money's got lots of social qualities that we've discussed interactionally, but also particularly if you are in a vulnerable position, often you will manage money socially, right? And something like a joint account is a very rare example of a social bank account, right? And so if we see things like cash, it's much easier to do a lot of social things with cash. So if we do see that decline, then I think we want to be looking at things like open banking to enable us to do more social things, like, for example, delegate payments or, allow people to act on our behalf in certain ways. I think there's lots of social things that cash lets us do either quite quickly or in a way that requires trust, but actually builds trust because it's a trusting thing to do to give someone.
I think you're right, but there's a boundedness around that with cash, right? So if you trust someone with a £10 note, then so how do you do that digitally? I guess, yeah. And we've looked like a lot of ease with the payments, but then also the ease of like a lot of our customers request sort of vouchers to give to their gifts. So we have to make that sort of a nice experience as much as possible. But then also like how do they redeem that? So, and that comes from I think a bad foundation I think on vouchers where retailers thought there was a big advantage for breakage on vouchers, and so they're trying to sort of almost like reverse that now and make it easier and easier to redeem the voucher. And so and I think that's going to be a big thing I think going forward. See how the UK government are proposing to sort of have benefits they're paid in vouchers, and how there is this stigma then about there's a problem to redeem that voucher and to spend it in store or wherever it is, and I guess that is potentially a barrier again. Like if they went totally down that route, what would that look like? I guess, yeah.
There's some really interesting writing about different when we start to use different kinds of monies, we have different transactional communities. So you can think of kind of like the multi-platinum credit card and access to a kind of first-class lounge in contrast to food stamps or these kinds of vouchers or things. Again, I think it's like, how do we ensure people don't get stuck in these boxes? Like, how can they use money, whatever kind, flexibly, to move between them, however they need to, in a sense.
And I'm interested because we spoke about kids and learning about money, but if we speak about ourselves or adults dealing with money, is the move to those kind of digital payment methods actually helping us manage our money better, or actually are we losing the sense of what money is worth? Because you mentioned open banking, there's lots of great solutions that have appeared using open banking around wealth management and things like that. Again, we're speaking about a small percentage of the overall population. So in terms of adoptions of those systems, we're still quite a long way before mass adoption. So in the current situation, we're in just that, as the digital payment revolution left a lot of people behind, or are we embracing it as a nation?
Yeah, one thing that comes up, well, as I say, we do a lot of research with sort of vulnerabilities and that kind of thing. There's something about just some of the things I was looking at before our discussion today around these vulnerabilities, and one of them is, to effectively engage with digital services, you need some sort of mental clarity. Like you need to be reasonably on it to make sure it's gone through okay, that you're picking the right account, that you're not making mistakes. And because it is so quick, often you don't have that same kind of, I suppose, reflective process you might have if it was a physical payment. In fact, our brains are wired differently. They behave differently with a physical money than they do with the digital version. So when people are in that time of crisis or in a difficult spot, I think digital banking is quite generic in the way it works. And I do think there's more that needs to be done there to kind of be aware of that. And so I think that is a big emerging area of opportunity actually for design and for digital services more generally.
So I saw something recently around sort of emergence of pay by bank. So when you're not paying through a card payment, but you're paying through open banking protocols. And that in itself is really interesting as a new payment rail beyond card transfer. But it made me think about all of the options you have at checkout. So whether that's Stripe or whether it's Klarna, and you talk about convenience, and it's interesting how streamlined that process has become. I guess with the desire to check you out as efficiently and cleanly as possible, I'm sure, Craig, that is a major thing from a commercial sense. But I do wonder how at the same time we design friction at just the right moments, either for some social end or just from a kind of a vulnerable customer perspective as well.
Yeah, that's right. Yeah, it's almost like build that into your user experience. Yeah, like that. I like that phrase, friction. Yeah, just to get that double check before they just click through. And you mentioned like the open banking thing. Yeah, so I think with open banking and as a payment, we've seen the big issue around trust with open banking. So because people are quite comfortable putting in their card details if they've come across Giftround, they've been invited to contribute into a collection. There's, I guess, well advertised and well known securities around card payments, but then all of a sudden they're asking you to log into your online banking directly through our sort of website, and they're like, "What's this? I'm not sure I like this." So I think trust is just the biggest thing around the whole thing. Yeah, all these things.
And we're approaching the end of the episode, but I wanted to finish just to speak about maybe the elephant in the room or CBDCs. We really touched on them very quickly, but do you see those type of currencies ever becoming mainstream, or will they be used only by digital savvy people?
Yeah, again, I think it's about trust, right? So people, I don't use cryptocurrency at all, and I'm not, because I don't quite understand the whole thing. So I know more and more people are using it. So maybe there'll be a point where I'll sort of log on and start to do a bit more with it. But I guess there's no need for me to use it, I don't think. I don't see a benefit in using it. So I'm quite happy just to trust my payment card and relax.
Yeah, there's quite a significant user experience problem with many challenges with it, but user experience problem with the idea of the way that cryptocurrency works, the fact that you have custody of that asset, it sits on a wallet on your phone, and it's not quite the same thing as being logged into your online bank, and it's quite subtle in the way it's different, but it's fundamental actually in the way it works. So I think the user experience around that is definitely something that needs to be addressed. I suppose on the CDBC side of things, it sort of proposes that, people that are maybe fall outside the banking system who don't have a bank account. So maybe people that are new to the country or, have got some other challenges can get access to money and participate through that means. I'm curious to see what actually that would look like and how it would work before I sort of have a view on it. But I think that as a concept feels like a useful thing to be working on, but whether or not it will take off, I don't know.
It sounds like what you're saying there again, Neil, is that we might have these quite specific forms of money for people in quite specific circumstances, and maybe one of the challenges with crypto is, besides many challenges with crypto, but one is sort of envisioning it as a kind of takeover narrative. It's going to take over or supersede the Bank of England, the Federal Reserve. But actually, maybe there's more opportunity in identifying some use cases, whether that's business to business or whether it's in particular end users who don't have certain credentials, that then actually it finds its groove or becomes particularly demonstrated as something useful. And perhaps it won't actually look like what we think crypto looks like today, even if it's running on some of the same rails as a ledger.
Yeah, it's a tech-led thing right now. It's almost leading the wrong way around, isn't it? What is the problem it's solving rather than what is the technology how does it work sort of thing?
Yeah, and we see with a lot of innovations that before they can succeed in a mainstream way, they need to find the kind of a number of niches in which they succeed and solve different aspects of the problem before they adopt it in the more sort of mainstream way. So yeah, certainly still feels like there's a lot to do there.
Well, listen, guys, we've reached the end of the episode. That's all the time we've got today, but that's a shame. I think we could have continued that conversation for a long time, but I just want to say thank you for joining me today on the FinTech Scotland podcast. I think it's been great conversation starter anyway, and lots of good insight from you.
Thank you very much.
Thanks a lot.
Thank you. Cheers. Bye.